Good afternoon and good morning and good evening, everyone. We are kicking off Forward Focus, and it is summer already. It is hitting the mid-90s here. I hope you guys are starting to warm up. It's been a crazy winter. The heat is on, exactly. Now I'm going to have that song stuck in my head, Donna. Thanks. We were just talking in the forum about what people listen to when they are trading. A lot of people have background music on. How many of you guys are listening to music when you're trading? Or what are you listening to when you're trading? Let's put it that way. We've got Nicole and Donna listening to music. What's everyone else doing? The voices in your head. I tried to put a earworm into everybody's head last week with baby scalp do 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 do. Changing that lovely earworm song to everybody. You love when I sing. Uh, I try to spare you guys. Sort of, not really. Mike is listening to music too. I I actually, you know what? I forget to turn anything on. I just have my charts up, and that's about it. I used to have like the TV on in the background, just kind of like low volume, just, you know, not really anything like that I'm actually paying any attention to. I have tinnitus, like super bad tinnitus. So I used to put stuff on to kind of drown that out. But after my CSF leak, I didn't really like having a lot of background noise on anymore. So I'm just kind of listen to the songs that my brain plays in its head. And now Donna has put The Heat Is On in my head. So that's what I'm going to be listening to in my head the rest of the day, probably. Does anybody watch any of the news channels? I am curious. Mike does. What do you watch, Mike? We've got a number of not anymore. We got Fox News, we got CNBC, we've got CNN, MSNBC. Wow, you guys just watch kind of everything, huh? Yeah, the problem that I run into with watching news is that they will attribute market moves to certain events, even when you've got like technical reasons behind it. And a lot of times, what happened when I was first trading was like they would be really bullish on something, and I'm seeing a short setup, and it would just completely mess me up. I've even gotten into arguments with Jim Cramer years ago. He'd be bullish on something or bearish on something. I'd be the other way. Like, what are you doing? Yeah, we want to find meaning. I think, as we were talking about in the forum, I think it's good to know when news is coming out, like when specific events are coming out. That's why I send you guys the earnings reports every week and the economic data releases every week, because it's really important to know when those are, because you will get reactionary moves. But sometimes you got something that would seem like good news and the market sells off, and then they'll be like, oh, well, they were expecting blah, 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 blah. And it can just really confuse you and mess you up, or at least it always did me. So I don't really watch them anymore. I have alerts set. So I will get things that will pop up when there is a news event, but it's more, hey, here's the news. not really telling me what their thoughts are on how the market should move based upon the news, just tells me what the news is. So that's what I find to be most helpful for me. But let's head on over. And of course, we have been seeing all kinds of action here over the last day or so. Oh, hey, before I get started, actually, I want to let you guys know you guys can all pick up my ebook for Simple Steps to Trading Discipline as well. Published this a while back, won the Axiom Business Book Award Silver Medal for investing and finance, and also the Reader's Choice Award for trading views. So we just got that converted into ebook format here, and you guys can pick up a copy, your very own copy, for $7, cheaper than the Kindle version on Amazon. So you guys can pick up a copy for $7 going to tonyhansen.com/ebook. So I wanted to let you guys know that that was available. And I'm actually setting up email follow-ups that go with it. So as you're reading through the book, you're actually going to get some emails that will ask you questions, to focus your thoughts as you are going through it. So it's really a great book if you're newer to trading or if you're struggling with your trading. It talks about things like my building blocks of price development, but a lot of it is emotional, building your confidence, really establishing a system so that you're overriding your emotional responses in trading. And that is the focus of the book, essentially overriding your emotional triggers in trading. So you guys can get a copy of that. tonyhansen.com/ebook. You can put it on your Kindle, your iPad, whatever. It's in EPUB format. All right, so let's head on over to the charts. And, whoa, my charts are hiding. Here we go. I'm going to take a look at the overall market here. So this is the fun, crazy insanity that was this morning. Actually, it was a pretty nice move technically. So here you can even see, just eyeballing the 5-minute chart, the measured move here at the high. And we were talking about in the forum, how important it is to back up and pay attention to what's going on the larger time frames. A lot of people probably got crushed as this was moving higher, thinking, oh, hey, this is the end. It's exhausted. It's going to turn around now. And if you're looking at the larger charts, you can look for these measured moves and really pay closer attention to them so that you don't have that happen as easily. An interesting thing when news hits and it moves the market, when you get these rapid pops and the pullbacks in a news-driven event, you will often get at least a retest of the previous high, and usually it will go further and even go to a higher high. In this case, we went substantially farther, but most news-driven events, you'll see a spike, you'll see correction, and you will see at least a retracement of this. So I like to buy things that are down at those levels. I didn't catch the one this morning driving my kid to camp, but I did yesterday with the same type of thing where we had basically, all the alerts were coming up. Hey, tariff deal, Mexico, blah, 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 blah. That's what was attributed the spike this yesterday. And bought the pullback for it, for the continuation. Momentum picks up so you can hold for longer, but you'll almost always get at least that retest of the previous high when there's something that hits the market where it's a news-driven event. So I love trading the first pullback on news if I miss the news, buying the actual pullback there. It is a crazy rapid environment, so it's something, as you're more advanced with trading, it's easier. But we had larger time frame reason for the market to break as well. So here's a 240-minute chart. And when you're looking at the correction earlier this week, we were looking for corrective mode after the rally starting off the week. And what happened was it basically formed a two-wave correction in here. So yesterday it tried to do a 2T, couldn't make it past the first major support levels on the 2T. It shifted momentum into that support. That actually triggered the second wave of correction within this congestion. So what we ended up getting was a tilted 1, 2, 3 pattern. The time development for the correction here was normal compared to some of the other previous corrections. So it wasn't that it went too fast, but given this momentum move being similar to the previous momentum moves, we needed some sort of correction before it could offer up a continuation. And so you'll notice these corrective moves, a lot of them are really similar to how long the move took the other day. Let me go and show you guys the details on this a little bit tighter here. I might switch over to a tick chart. But here, what we're looking at is, it's hard to see this, but when you think of this as this being a first wave of correction, this being a two-wave attempt to continue, this being the pullback for an attempted 2T, where your 2T is basically here, it couldn't make it past that first main congestion support. That was the heads up that, hey, something is off here. Now, time frame charts, we don't see the symmetry as well. But when you go and you switch over to the tick charts, especially like the 20,000, 8,000 tick chart, here's the 8,000 tick chart. The symmetry starts to clear up. So here's the 2T attempt right here. And then it followed through really fast immediately to kind of the zone of the channel support. And then it shifted. It shifted the momentum into that second support level where we have the congestion. So what we need for 2T is this should have turned around pretty fast. It should have at least had the same momentum on the downside as it had on the upside in order to go into a longer correction. It didn't do that. So instead, when you look at the time development here, here's your first pullback. This zone ends up being the second correction of a tilted continuation. So in another instance, it might look like this. Where here's your first pullback, here's your second pullback, here's your first pullback, here's your second pullback. It's often two waves. So you'll see two, you'll see two, you'll see two. So it's the same pattern. It's just tilt to the upside. And this became essentially a do or die point because when you're looking at the time development, it's right around the same time development. So even though news hit there, or at least the news channels picked up and started running with a news headline, you actually had a technical trigger at that point too. Volume was really dead at that point. So the lack of volume helped surge that move as well. And now what we're dealing with is trying to go for the larger measured move here now. We just hit a 76.4% extension. I know for sure on the S&P 500 because I shorted it, but I don't know. Let's see if let's put it on here on the NASDAQ too. Yep, it's right at 76.4 on the NASDAQ as well. So I wait for levels like that before I will go and try to go against that trend. I'm not going to try to short that, even though it's hitting additional extension resistance levels, because with this strong momentum over here and the same momentum over here, look at how small those corrections are. It's so easy to get trapped and stuck in those type of moves. And if you got locked down on just a smaller time frame chart, not necessarily the time frame charts, because those stayed very bullish, but the tick charts on a smaller time frame, like a 200 tick chart, you might have started looking for things in here as reversals that could have got you trapped. Luckily, we did not have a lot of false setups here, but a lot of times people try to short absolute pivots without a strong major resistance. So we had, first price correction, then time correction, price correction, time correction. Those typically keep pushing things up. That's what actually triggered us here this morning as well out of the open. Price correction, time correction, price correction, time correction, price correction, time correction. Those lead to the most solid continuation moves, even if they only go for a measured move to here. This is kind of like your, I know I'm not supposed to say guaranteed level, but it's kind of like the guaranteed level. It's going to hit there like 90% of the time where you're going to get that measured move. Of course, in each of these instances, it went past that, but that's like what you're looking for is your highest probability. It's going to hit there. So that's like the minimum that you're going to look for when you're looking for price correction, time correction. Even if this happens at the top of a trend, if you get price correction, time correction, you'll get that higher high. Now that can go and create a 2T off of it, but you'll get that level. So it's a pretty strong setup when you see it, and it can help prevent you from ending up in the wrong direction in a move. Over here, what you'll see is I didn't have another setup to short, did I? There was no smaller setup up there. I was just basing this purely upon measured move levels and the larger 76.4% Fibonacci retracement. Because usually with a really strong move, Fibonacci at 76.4, you're going to get an intraday correction. It can still go hit the 100%, of course, on the larger time frame, but you'll usually get a little bit of a better correction. And since each of the previous corrections were more over time corrections, they were all bases for the most part. That tells me once it hits that larger resistance, more likely to get a price correction off of that level. Now, I actually took it at two levels. I took it short here and added in here, going on the smaller measured moves and the bigger measured moves. For those of you that caught my class yesterday, that was exactly the same technique that I used to get into the trade. But we didn't have a core pattern. So I showed you guys how to do it with a cup with handle, but this is also same idea using pure support or resistance. So I'm not going to try to go against that trend unless it's at one of those major Fibonacci extension levels. And what we're looking at right now too is it's also looks close to 100% level. Even though it's technically like 76.4, it looks like it's close to that 100% level. So you've got it pretty darn close. Also coming up into this congestion. Again, look at this. Price, time. Those will usually go for that measured move level. This took a little bit of a pause to get there, but it still managed to get there. Why are my fans not drawn to the bottom of the down trend? Let me see where you were looking at. Here? On the 240? A lot of times when I'll start, I'll look at the first move, and then as things progress and this confirms, then I'll also look at that one. But I always start with the first move. So if there's like a two-wave move, I'm going to look at the first move. And a lot of times what you'll find is that if you keep both of them on, you're going to get reactions at both of those levels. So here, you can see it reacted to the 61.8. So that tells me I've got it at a good level. Notice that on the way down, each of these levels is serving as support as it comes back. And even when this pulls back up, that's also where we went into that congestion. So they'll continue to work even after you've got a lower low, but you can then go and shift it too and compare each of those levels. So right now we're coming up into that 61.8% again. So that's going to be basically your next fan resistance here. A lot of times I'll put fibs on my charts too, and then I just, leave them up there and forget to move them. Here's another example of that. So see how I went and just used that first two-wave move, and then you've got the correction. But even though this keeps going higher, look at how it still reacts off of those levels. So this is where I first started watching this to look for a short, but then I also looked for that measured move. I was paying attention to the S&P 500 at the time too. So you can also go in this point and go move it up to here as well. And I'll show you, I actually did that on let's see where's my chart at? Maybe I erased it. Oh, I know, it's the other one, hold on. I've got two NQ charts up. This one here. I used this to help me protect the gains on the short. So you can see on this one, I went from the low to the absolute high, and then looking at these retracement levels. So this actually got me into this, and I flipped the trade, scalped it on the upside there, coming off of that fan support. Do I use the SPY as confirmation? Yes, I've got the Dow up, I've got the SPY up, and I've got the Russell up. In fact, you guys in the forum, the SPY right here, where I flipped the short to the long side, this was actually also based upon something that was happening in the Russell right here, right at a pretty good support level. Nice two-wave correction into that support. So that gave me the confirmation, along with, of course, momentum shift into the support, two-wave correction, and the fact that this was only the 76.4% high. So there was still room, it could go up to 100%. I closed it ahead of with just the two-wave move up here, but it still has the potential to go up to that 100% here this afternoon. I just didn't want to be in a trade trying to do forward focus at the same time. What was my entry? Let me look. Execution price by let's see, is that the right one? 74. So I have a couple executions, 74.19.75 and 74.18.75. So basically in here on that. Let's see. Oh, thank you, Bo. All right, let's go and take a look at what we've got going on for this afternoon. So I've kind of given you a heads up here, what I'm looking for now. Actually, I would have been back in this on the two wave if we weren't going into forward focus here. Look at that nice shift there. This is the type of thing. So first, I bought this here with the momentum reversal. You got your three lows, and they were V's. So that's what got me into it as a momentum reversal. Took it off as it was coming into this previous high zone here. But all of these strategies will play out on pretty much every time frame. So this afternoon, what I'm looking at, strong upside momentum, good chance this is going to try to continue to pull up a little bit more. So I would not even be shocked if we get that higher high. We are a little bit shy of that full 100%. But with your 1, 2, 3 like this, where it goes up really fast, pauses, does kind of the measure move zone, pulls back, you have a very high probability that it's going to at least retest those previous high zones. So if something reacts off that 76.4, I love buying that for the continuation. But I want to look for things like making sure it's a two-way pullback, making sure you've got the momentum in your favor. Those are going to give you higher probability. So the shift in the momentum like this, that's exactly what you want to see. And then it further shifts. You basically have an inverse head and shoulders here. So you can get these pretty close to the absolute support level. You use advanced trade management. By this point, even if this failed and didn't work, you still wouldn't have a stop because you would be protecting part of your gains into the previous highs, looking for levels to build it back in on corrections. So basically playing the move as it's working is what I do. This is what I talked about yesterday in the webinar on Ninja Trader. And I'll be repeating that webinar for you guys too. If you didn't make it there, I will be doing that again later this month too, so you guys can get an updated version on it. So bigger time frame here, larger markets, we've got wiggle room. All of the indices have more wiggle room at the highs. For if this was to fail, most often what would happen is that this would be more of a two-way pullback like this. Then you would go into more of a two-wave base like this, and then you would be more likely to get stronger momentum on the downside. That is how it will look most of the time when this fails. If this shifts like this, it's more likely to head up. So if you see it the other way around, where this is more of a consistent 1, 2, 3, nice two-wave pullback here, when it goes out about the same amount of time, it can go and drop at that point. It might go out twice as long and drop. Both of those are possible. I've talked about this a lot in the past, but for the new folks, you guys can know that now. Do I take the fact that it is Friday and a lot of people get out before the close into account? Yeah, but I still think we've got bulls going into the close. So I think that we have the possibility of driving this up here still before the end of the day. And in fact, we're still seeing that Russell chart that I posted for you guys in the forum. It is holding that support perfectly. It is absolutely reacting right off of that low. And we're about up here. Now we're actually at first resistance level on that Russell, right where the previous congestion is. Let's see if I've got a chart open on the Russell. I do. Here we go. So it took a little bit of a little extra shift to help turn it around. Here's your two-wave move, and this was the support. So it kind of got off to a little slower of a start, but it's making up for it now. And this is the first resistance zone on this here. And let's look at, you guys have any individual stocks you want me to take a look at? Please post them here in the Q&A channel, and we will take a look at those as well. Why don't I take trades into forward focus? Because I watch my trades pretty closely. So if momentum starts to shift, things change, I am phasing in and out of the trade. And if I get distracted, I tend to miss my triggers. Trust me, I've tried it. Nah, I still do it occasionally. I just don't love to do it. Stocks, KMI and SQ. And we've got some Forex pairs to take a look at too. Let me show you guys euro dollar. This is one I've been playing on the upside this week based upon what we talked about last week. Remember, things were shifting to the bullish side last week. So on our monthly, actually, we're going to go down to the weekly chart. Look at this. See that shift? Just like we were seeing here at the highs on The NASDAQ, it's the same thing. This trade here, I bought this for the exact same reason that I just had the buy setup on the NASDAQ. So what we needed to see for this breakdown, we were at a midway point in this pullback. We've been watching this for months, but we needed to see this confirm here. And it didn't. It continued to hold this range. So that shifted the momentum again and hence made it higher probability that it would bounce up out of that range. This has a lot more potential, just like the overall market does. Now it can get started slower, just like we saw on the NASDAQ. Again, let me show you that comparison to what we're looking at here. So here's the same setup using the NASDAQ. Same idea, same setup, totally different markets, totally different time frames. This actually goes to that extra little push there. So just like this kind of did this little doodah here, this can do that too. A little bit less of a chance because it kind of already did it here. But same idea, same concept. This is a 200 tick on the NQ. This is a weekly chart of the euro dollar. Am I swing trading it? Yes. So I took it as a swing trade. I took off partials as day trade and then added back in. I think I posted, or no, I took off all of it as a day trade and then I went back in. Let me look at my chart here. My executions. Yeah, so we had a larger measured move. I was looking for correction, figured, it's gonna pull back. And I went back into it. I posted that in the room for you guys. We talked about it on the morning on the 6th too, yesterday morning actually, in League of Traders Live. So this one, I'm still expecting more upside on this. We are just hitting measured move levels on a 10-minute chart on the intraday charts. So you're going to probably see a little bit of reaction. I know I went from trading the dollar yen as being my favorite for a few months to this last week, it's just been all about the euro. We'll look at the dollar yen here quick. So the dollar yen's gotten, it's had pretty decent moves here. Look at this. Again, price correction, time correction, and at least goes to that measured move there. So I didn't take this one, but you can see that same pattern that we were just talking about in the other markets here. And this still is looking lower at this point. With the way the momentum is unfolding, I would expect this to try to continue into next week. JNUG again. We are still right at that first resistance level. You'll notice whenever you have a rally on a daily chart and you get two gaps, so it starts out rallies, two gaps, 3-day move, it always slows after that next day. So you'll always get this type of reaction where it goes and becomes more choppy. Usually a rule you can use is if you watch a 15-minute chart and put a 20-period simple moving average on it, if you have a move that holds that 20-period simple moving average on the 15-minute chart for 2.5 to 3 days, it will break it the next day, like well over 90 some percent, almost 100% of the time. Now, it doesn't mean it's going to reverse. It just means it's going to, break that moving average. So it'll go into more of a choppier range usually. For longer term trades, if you don't mind me asking, how long do you hold a trade on average, weeks or months? It depends. I mean, I'll do both. Um, for like longer term investment, if it's basically whatever time frame the setup happens on is what guides me to how long I'm going to hold it. So I'll have investment trades that I'll hold for years, like GPN that I gave you guys back in like 2014. But others, I don't, there's not a lot that I'll hold for weeks really. I kind of tend to go like one or the other, like a swing trade or longer term investments. I don't do as much position trading right now as I used to. It's not that I don't have that I have any problem with it, looking for setups that are going to hold for like a few weeks on end. It's just it takes time to scan and find the setups. So if I find one, great, but um, I haven't put as much time into doing the scanning that's necessary to find those setups lately. So that's the only reason that I haven't done many of those. Do I sell calls against any of my trades? No, I don't. I don't do options. I know I'm weird. Options are really something that became popular over like the last 10 years or so. I think it was more of a thing that hit after the pattern day trader rule came about. A lot more people went into doing options. It's too much work, right? I know I shouldn't say that. Actually trading stocks and doing position trades in stocks is really lucrative, but you have to put in the time to do the scaling, to do the, not the scaling, the scanning, to do the scanning. You've got to put in the time to do the scanning to find the setups. And usually what that means for me is just manually going through the indices and looking for things. I'll look for things that are like um, having bigger like 52-week moves. I'll look for things that are in the news and see if there's patterns on those. I don't really have like a main strategy for how I will locate those. I used to use TC2000, and that's still a good platform for you guys too. You'll notice our Russell is kind of stalling right at that first zone of resistance we were looking at. Let's just kind of give me a little bit of a pause here. Other stocks, KMI, let's go back to those. So we've got first measured move resistance here on the daily chart. Pretty good impulse move size. I would suspect you're going to go into a corrective mode here now on the intraday charts. This also went really fast on the daily time frame for an attempted continuation. Let's look at the larger charts here. See what we've got going on. My volume's all messed up on this. This is kind of trying to go on the fast side. It's basically like what we saw happening in the overall market. So this is a do or die point here. Just like what we saw, that 2T attempt yesterday in the NASDAQ, it's kind of trying to do that same thing on the weekly chart here. So that's going to be a really key spot here on the daily chart. I would expect this to react here, pull back. Momentum is strong enough that we do have the potential for this to continue, but it is a do or die point. So this could easily pull back at this point, give you intraday correction. Longer term as an investment on this, I would not be as worried. You've got rounding off here. Momentum's picked up on the high compared to the slower downside. So it looks pretty decent for a longer term hold. Square SQ. Um, I would have liked to have seen this slow a little bit more on this pullback. I haven't traded Square in a while. You can see we've got the shallow avalanche here, and this is trying to shift momentum. If this had kind of shifted a little bit more, given a clearer two-way pullback, I would have been more on board with this. But this is really just one wave of correction after this rounded off. So this is just one main wave on the upside. This is one main wave on the downside. My concern is this going to go into a megaphone and end up breaking down again? This would be 1, 2, 3. So it's picking up momentum, which is good, but it's not at a great trend placement because it only has that first main wave after this shifted down. If it had had two waves, you'd be in a better position, especially if it had two waves and this shifted like that. That would be a better buy position for a bigger position trade. So SQ, you really have got to watch the intraday charts right now. That's going to have to be your guide. There's still room on this for 1, 2, 3 on the 240 minutes. So there's still some upside here. Probably look for about 70 as a target zone on this daily swing. Yeah, it does almost look like an inverse head and shoulders, right? If it went into more of that megaphone type of pattern here, that could do that. I'm not a big fan of buying a support level as a longer term hold unless I've got that shift in momentum and it's had two waves. Two waves and shifts, that's a much better setup than just the one wave. So see how this has two waves and this second has two waves. That allows for that better bounce there. So this is the first wave down, has a two-wave correction, and then it has a two-wave continuation. So this is technically the second wave, which has much slower momentum than the first wave. Even though portions of it are fast, like this, the overall channel shifts, and that's what allows this to pop. SFIX. That's what I was thinking. I looked at this and I'm like, that looks like it's kind of based out a little bit longer than we would want to see. And sure enough, it's past that 76.4% fan. I think your SFIX is going to go into a choppier range here. So I think this is probably going to go like this. I wouldn't really do anything on this for like a new position trade or a swing trade. I would just play it on the intraday charts, like 15-minute for setups, but this is not an ideal placement for this. It basically pulled back too far and too fast. If this had just shifted just a little bit more like that and held that zone, you'd be looking to at least get back up to this zone of the previous highs. Probably wouldn't go past that as easily because of it pulling back 50%, but at least you'd have a better shot of that happening. So I'd be more cautious on this one on new setups. Just focus purely on the intraday action and realize that, yeah, it can move up a little bit on the daily, but it's not at as an ideal zone to do a really strong surge as it would have been if it had pulled back into that 76.4% more gently, or at least shifted momentum better when it hit that level. That Russell is really doing well. Roku. Everyone's talking about Roku. So let's remove that and let's put those extension lines on here. We are right smack dab at that 100% extension today. So this is a 1, 2, 3 on the weekly. So we should basically expect this to widen up here at this point. Notice how it stalled at 76.4. Let me show you. See here? When you get little stalls at levels like that, if you got the small measured move at that level, you can get those intraday pullbacks. You can get those small setups, just like I had on the market here off of that high earlier this morning. But that 100% serves as a draw. So we're at that 100% point. This is where I would expect this channel to now break and start to widen up, get more of the back and forth swings. You probably still have good swing trade potential at these levels, just looking for more of the back and forth swings. I would use the intraday charts for triggers. But Roku's going to stay active over the next couple of weeks, even probably the next couple of months. You'll still get some pretty decent setups on it as it does the back and forth action in here. So I would continue to keep this on like in my active trader list, basically. Beyond Meat. So it went and did what we talked about the other day, right? So we were looking at this as a two-way correction with that to have that 1, 2, 3 potential. That's what we hit here today. So this is now going to be at the widening up zone. Beyond Me would not want to go buying this other than anything as just a day trade at this point. A lot of people were looking at these three highs and looking at that for a potential for a momentum reversal. And so we went into detail on this in the forum because, or in League of Traders rather, because, let's widen this up. It wasn't a pretty momentum reversal. When you go and look at the details, the distance between the highs, not the same. And this was actually a slower pullback here than here. So you've got price correction, time correction. It's going to hit that measured move good 90% of the time. But because it's slower and this had a stronger start, basically we were looking at this as 1 and 2 wave correction with the potential to do a 2 wave continuation. And that's where we're at now. So this is actually still intraday. You could still see decent buy setups on this. Use a lot of caution thinking about shorting anything like this. This is going to hold up pretty well. Here, you're right at a target level on an intraday chart. So this is actually a good resistance level here intraday. This is a 15-minute. That was a really pretty setup actually here on the intraday charts. 2 wave up, you've got your nice little correction, basically inverse head and shoulders, and the continuation. So you're at a resistance zone in here, but this can still creep a little bit higher here. And this would usually have a harder time giving you a full-on sharp pullback. More often it'll be choppier. You'll get a lot more overlap bar to bar. What is it about markets gravitating towards measured moves? Does it have to do with human psychology? Probably. I mean, we like symmetry. I think it's even more focused these days than it was when I first started trading. It wasn't really something people paid as much attention to back in like the 1990s. It did to some degree, but it wasn't like as prevalent of a focus. But if you're going to learn anything about the market and trading, it is that the market likes to gravitate towards measured moves. So if you're trying to go against a move and the larger level hasn't hit a measured move yet, it's more likely that it could just be a shorter term correction, and then we'll try to go back in the direction of the bigger trend, especially if the momentum is the same. And that's the key. The momentum needs to be the same. So as long as you got momentum that's working its way up at the same pace as over here, it's going to try to go to that 100%. It might stall at the 76.4, but it's going to try to go to the 100%. Also, it has to do with trend placement. So you're more likely to get 2 and possibly 3 measured moves than you would get 4 measured moves in a row, where you've got the same correction time between each of those moves. Usually after 3 moves, if the correction between each of those is the same amount of time, that fourth one is not going to make it to that 100%. Is it part to do with algorithms? Probably. I mean, I think that that's more prominent now than it was 20 years ago. So you could easily have that as an influencer as well. Also, I mean, it's a pretty well taught technique now. So a lot of people, you got your individual traders really trying to hone in on those measured moves as well. So I think that's a big factor too. And it's always been the case though. Exactly. Measured moves were happening as far back as the 1930s. Exactly. And actually, the high in 2000 in the NASDAQ, I timed that high because I was looking at inflation adjusted measured moves. And how many people look at inflation adjusted measured moves? And it still worked. It still worked exactly with the market going into the end of last year too. We were looking at it. The very first forward focus I did for 2019, we were looking at the larger measured moves that were inflation adjusted. And that's what's led to continued congestion here throughout this year, as far as like technical analysis goes. So it's really interesting. My background, of course, is anthropology, study of humans. I was an archaeologist for years. And if we've always been creatures of habit that seem to be easily able to be graphed on charts, even if you track human migration movements, you can chart them. You can chart pretty much anything. You know, the housing market boom and bust. You can look for the same patterns in the housing market prices as you can in the stock market. Pretty much anything that deals with human emotions. Donna, guilty as charged. Harvey, you've probably done that, right? I know Donna has. We are all robots, maybe. XLY. So XLY, we're at a pretty extended level here. Intraday, let's look at our weekly. Weekly, we're just coming off of that megaphone two-wave correction. I think we'll still push higher, but probably shift momentum at this point. We do see cases where this will go to 1, 2, 3. I wouldn't go against this trend. I think any correction you're going to have is probably going to be a shorter little correction. We might go for like a 2T on the weekly time frame at this level. That's a possibility here with the way this is formed with the strong momentum so far on the daily chart off of that low. 60-minute, you can see we're still shy of 100% on the 60-minute. So I wouldn't be surprised this kind of does like a congestion type of move and then tries to go higher even. That's what the daily looks like. TC 2000, yep. A couple of you guys are saying how you like TC 2000 for scanning. EXR. Oops. Type it properly. Where's my weekly? I'm gonna look at my weekly first. Okay, this is interesting. Let me look at the monthly. This looks like it's gonna keep going further. There's not like a clear pattern on here. What you're looking at kind of is the price correction, and then it's kind of trying to do more of a time correction here. So it's gaining momentum, which looks like it's going to continue to push higher. It's not the strongest pattern for like being like a clear-cut pattern, but it is still looking higher. Let's see, where did my weekly go again? I flipped it. So you're looking at 1, 2, 3, gaining momentum there. So even short-term swing trade, I'd be looking for up here as a target. You like that news? Yeah, I think you're still going to get more out of this. I was kind of looking at this on the the chart here. Kind of looks a lot like the NASDAQ did, breaking up, but this already had such a huge run. I don't know how much farther that's going to go. But it's basically treating this like the first correction and this like a second correction. It doesn't really have the characteristics of a 2T because it's gaining momentum and kind of starts out slowly here. So I think it has a shot, a decent shot at getting past that 100% here. Yeah, it is a little bit of an odd pattern. This, though, that's tilted um, triangle like this. This breaks up, a lot of times that actually gains momentum, and you'll see it with megaphones too. Actually, what led to the breakout yesterday in the overall market was a megaphone, but it was tilted to the upside. So it looked like that, and then it just gained momentum. That is a really common pattern for picking things up out of where there's like really light volume, nothing's going on. But if it's a tilted megaphone, it can go and lead to these 1, 2, 3 moves. I haven't really talked about that pattern a lot. It's an advanced strategy, but it is a common one. That's why I said yesterday there was a technical pattern for the breakout. It wasn't just like there was suddenly news event that's driving it. You had technical patterns for it. You feel a class coming on. I think you are right, Donna. I think that that needs a class. I will compile more examples of it to do a class on it for you guys in League of Traders. I gotta find more examples though too. It's a common pattern, but it certainly doesn't happen every day. but you'll find it, once or twice a week or so, just depending on how many markets you follow. I've seen it a couple of times over the last week or so. All right, we are going to wrap it up here today. Thank you all for joining me. I will get the replay hooked up for you guys on YouTube here really shortly. And you can also find it by going to tonyhansen.com/Friday. That's also the short link. And again, the ebook, let me grab you the ebook link, is, well, it's really simple. It's tonyhansen.com/ebook. So if you want to grab a copy of that, you can do that now and have some enjoyable weekend reading. I'm a pretty voracious reader. I read about 3 books a week. I think you'll make it through here, maybe about 4 or 5 hours. You can make it through the book. I don't know how long it takes, but what I recommend is reading the book each part at a time. So like read part 1, then read part 2. So just kind of break it up. And as you buy it, I'm also sending out emails that will have you think about different things within the book, have you answer questions about different things in the book, make you think about it, kind of like worksheet type of stuff. My admin's like, what are you doing giving them homework? I'm like, trust me, it's good. Just send the emails. That's what I told him. Just send it. Thank you, guys. All right, everyone. I will see you all back here next week. Have a wonderful weekend.